Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. Today, the net asset of my account is $69,930.76. Today, Apple has closed up 0.54%, SQQQ closed down 1.36%, and S&P 500 as ETF SPY has closed up 0.61%. United Natural Gas closed up 0.2%. Today, the market generally performed well. Nasdaq Composite closed up 0.66%. S&P 500 closed with a gain of 0.59%. And Dow Jones also closed out 0.68%. Today, all of the industries except for information technology, healthcare, and beverages closed down with a loss of less than 0.1%. All of the rest of the industries has posted a gain, and as investors continue to wait for the future reinforcement of the interest rate cuts in 2024. Today, there are two FOMC officials that expressed their pessimism towards the interest rate cuts that the President Jerome Powell released earlier this month. Efforts by the Federal Reserve officials to downplay expectations of interest rate cuts, they failed to prevent the broader U.S. stock market from continuing to rally overnight, with Asian stocks rallying higher on Wednesday, and with the Nikkei 225 index surging 1.7% at one point, its biggest intraday gain in more than a week. Benchmark stock indices for Hong Kong, South Korea, and Australia were higher. The yield on the 10-year Treasury note slipped 2 basis points to 3.91%. Japan's 10-year government bond yield fell below 0.6% for the first time since August, as speculation about Bank of Japan's near-term exit from negative interest rates cooled. And yen, which fell on Tuesday, stabilized and traded in a narrow range near flat. The U.S. 10-year Treasury yield extended its decline, and the dollar index stabilized after trading lower overnight. G10 currencies were generally weak, with major Asian currencies trading mixed. WTI crude oil futures are trading to their highest level in more than 2 weeks, with more shipping lines opting for detours after a surge in attacks on ships in the Red Sea. The two Fed officials believe that the inflation is moving in the right direction, but is still too high and that patience is needed. The Richmond Fed President Barkin has said that the Fed will cut interest rates if inflation continues to progress in the near term. But still, the Fed is still waiting for evidence that inflation will return to the Fed's 2% target. Barkin said on Tuesday that if you think inflation is going to come down smoothly, we certainly react appropriately. Barkin, notably, he will be a member of the FOMC voting committee next year, and his view is that inflation is more stubborn than the average person. The Atlanta Fed President Bostic, who will also be a member of next year's FOMC, said that he expects the rate cut to be less urgent, stressing that the Fed must be firm and patient as officials assess their next policy move. While inflation is going to come down relatively over the next 6 months, it means that the Fed does not need to abandon its interest rate hike that it's currently keeping. He expects the Fed to cut interest rates twice in the second half of 2024 as inflation continues to slowly decline, but said there has been no positive discussion about this at the moment. Policymakers left rates unchanged for the third time in a row in their December 13th meeting, signaling that they may expect 3 rate cuts next year. But the market believes that the first rate cut could be in March, although several Fed officials, like we just talked about, have expected to lower interest rates for a later period in next 2024. Bostic said that as inflation continues to move closer to the 2% target, policymakers may need to start cutting interest rates to avoid unnecessary damage to the labor market, but he's not discussed any of his colleagues about how they will handle the situation when it comes to cutting interest rates. There are still uncertainties among officials, and they have to be extremely cautious and resolute. CPI data released last week shows that the core CPI fell below 3% on an annualized 6-month basis for the first time since 2021. The latest PPI data also paints a favorable picture for a key inflation measure that the Fed is closely watching. On Friday, the U.S. will also release PCE data for November. Bostic said he expects the labor market and price pressures to continue to cool and said he will keep a close eye on the 3 and 6 months inflation data. Overall, inflation has been moving down slowly and stably, and the Fed officials have wanting to keep the trend going. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.